Recently enacted legislation is providing the means for entrepreneurs to expand their sources of capital to virtually every person of legal age. This is the new world of crowdfunding, which allows relatively small amounts of capital to be invested in startup companies. My name is Jim Connor. Welcome to Game Changer Silicon Valley. This segment of tonight's show will address the crowdfunding movement, the legal and compliance procedures, and the role of crowdfunding platforms to introduce entrepreneurs to investors. My guests are Dan Hansen, founder and partner of Montgomery and Hansen, a well-known Silicon Valley law firm, and Sydney Armani, CEO of Silicon Valley Crowdfund Ventures. Dan and Sydney, welcome to the show. I'm really excited to have you guys here tonight and to discuss this crowdfunding issue. So, Sydney, you kind of gave me a scenario where you said that crowdfunding has been around quite a while, that it's nothing new in particular, and I'll let you maybe start out by explaining to me and our audience about how has crowdfunding been around in our society or in our economy?
Well, first of all, Jim, thanks for having me and Dan in here, and we're glad to participate in your shows. I'm one of the regular watching your show, and I'm very fascinated with the crowdfunding, and I have a lot of passion. About 4 years ago, I got into the crowdfunding just by accident. Crowdfunding is nothing new. It's been in ancient history. You know, when you go to the church in the end of the sermon, when they pass the plate, it's crowdfunding. So when you go in the synagogue and different places, so crowdfunding has been the other in religious they figure it out before any of us.
That's a pretty broad definition.
It is. It is. You pay it's a crowdfunded.
I mean, I'm used to crowdfunding being like the election, you know, where the politician's going to say, send me $25 and so on, small amounts. I hadn't thought about the churches and so on.
Speaking of politics, the President Obama 8 years ago, we had about $180 million, the first president of the United States that got crowdfunded at $50 and less. Politicians use crowdfunding.
Okay, so Dan, the community here, all the startups in Silicon Valley, they've been going and doing, raising money with venture capital firms and angel groups and individual angels. It's been going for about 20 to 25 years now. And there's been a series of laws, historically speaking, and today we have a new set of laws. Part of them are coming from the Jobs Act and so on like that. Could you maybe give us an overview of what are these categories?
Sure. So crowdfunding from the securities lawyer standpoint, there's kind of four main categories as we look at it. One is what's called Regulation A+, relatively new law. It is what I would call a mini IPO. There's the Rule 506C. This is a private offering with general solicitation and advertising. There's product crowdfunding. That one's been around a little bit longer. And then there's equity crowdfunding, which is the brand new law, and we can go into more detail. That's brand new. We just got it in May.
The product crowdfunding, is that a Kickstarter type thing?
Exactly.
It is. So where you buy a product, you may, probably for future delivery, or you buy and support an idea for that matter.
Correct.
And you put some money into it, and the company can go do whatever they want, and if it's for a product, they hopefully would deliver it. There's been a few blowouts in that area where company went up in smoke before they could deliver, or they just couldn't deliver.
Correct.
So then the angel groups around here, what is their approach?
So the primary means by which investments are done in Silicon Valley are through what are called 506B. Used to be just called Rule 506, but it's essentially it's a private transaction with accredited, sophisticated investors. And it's done on a private basis, not a crowdfunding kind of platform basis. That's the traditional model.
That represents people who can afford to lose the money, I guess.
Exactly.
Is that right?
Now, that's the theory.
Is the sophistication a measure of that you have the money, or are they truly sophisticated?
Well, the requirement under Rule 506 is sophisticated enough to understand the investment and the risks associated with it. Okay. So in the new crowdfunding era, we're talking about a different animal in that case.
Okay. So Sydney, now your experience is in the 506A Reg A plus or A plus, correct? Now that used to be a $5 million cap at one time, and that's been raised to now you can invest $50 million.
Yeah, they forget $50 million. It was $5 million under Regulation A. Dan, as Dan mentioned, is that, but it was difficult. You have to go and register in every state. So it's probably going to cost you about $1 million to register in every state to raise about $5 million. Under the Jobs Act, and the Title IV of the Jobs Act and the Regulation A+, you can raise up to $50 million, and you don't need to have a register in every state. And it was, and it is good, as like Dan mentioned, they call it mini IPOs. Just give a lot of companies before they go to public and to raise about $50 million.
So what's the reality? Are people raising 10, 20, 30 million, or are they? And what kind of deals are using this Reg A?
Well, it's interesting you ask. I mean, one of the most successful has been, Elio Motors. Elio Motors raised about $17 million just about last year. But there are people, they went to the platform and they were too early. It depends that you have your audience. You have already have your customers that want to be put, and your investor for that matter.
Let me give you one more question. If I invested in a 506A offering, A plus, 506A plus, do I get to sell my stock at some point? Is there a market to sell, or do I just have to hold it perpetually?
Well, that's the big if, and that's a big question. Dan can elaborate better than it's not. The rule has not been set. It's all this experiment. There are companies that right now they're working on the secondary market. One of them is OTC Marketplace out of New York. So
Jim, there are some specific requirements about Reg A that are probably relevant. These are relatively sophisticated transactions in that the company has to have audited financials for 2 years. They're obligated to provide annual, semi-annual, and periodic reporting, sort of like how public companies are. There's also limits on the amount you can take from unaccredited investors in terms of a percentage of their income. These tend to be pretty sophisticated deals.
And actually, I overlooked that. I didn't realize that Reg A Plus could also receive money from unaccredited investors. So that's a different.
And they can advertise.
And they can advertise. So now let's talk then about back to your particular area of the 506C is in Charlie. That's the one that's gotten a lot of attention here from startup companies, because this says that they can essentially advertise their offering, and they do it typically with a crowdfunding platform of some type, Angel List or Crowdfunder or.
Yeah, there's several. It's Our Crowd. There are a couple of companies that they're doing it. So they're doing a good job with that.
So how is that going here? Is that starting to be picked up, or are people in Silicon Valley still doing the traditional angel venture capital route?
Well, first, just to kind of get to the basics of what 506C, what it requires is it's similar to the prior 506B in that sophisticated investor, an accredited investor. The only difference is now you can advertise and you can generally solicit. Now, if you do that, the requirement is the company has to take reasonable steps to confirm that the investor is accredited. This would mean, copies of your bank statements, a letter from your lawyer or your registered investment advisor. And the companies don't have to do this through a portal or through a website. So 506C deals are being done by direct approach. Advertise it. I'm not seeing the deals in Silicon Valley. I've seen a few come across my emails. We haven't. I take that back. We've done one in our firm. It wasn't a direct tech deal, but in general, we're not seeing a lot of these C deals right now. 506C in Silicon Valley. It's still the old rule. 506B. Know your investor and invest through people you have relationships with.
But let me elaborate on what you mentioned about Kickstarters. That's a reward crowdfunding. But what's interesting is in Silicon Valley, what's going on is that a lot of people that they go to the VCs and they ask for money, so they send them as a market validation. They send them to the Kickstarters, and one of them was that Pebble Watch. Pebble Watch, they were looking for money. They came over here and they went to the Kickstarter, raised about $10 million. Then they moved. So those reward crowdfunding is a step to getting to the equity crowdfunding.
I see. So Dan, on this 506C also, you do have to, as you said, the company takes the responsibility for validating that the investor is accredited, and I guess there are some conditions or penalties if you don't do that. Is that who figures this out? Who monitors this? Or does there have to be a scandal and then somebody looks and says, oh, you had somebody who was not an accredited investor, therefore you're liable? So how does that work?
Well, it remains to be seen. These rules are relatively new. But in general, it's a facts and circumstances test, and the SEC could do an investigation. We don't see a lot of this. We don't see a lot of investigations or prosecutions, at least in our world, Silicon Valley world. But it could happen. Usually when these come up, it's from a disgruntled investor who, the company failed and they're unhappy about the process, and then they'll call the SEC and maybe they'll follow up in that.
So here's a question I really have been wanting to ask people like you guys. Who are the vested parties in either pro or con crowdfunding? I mean, it would seem that everybody wouldn't typically be pro crowdfunding because you're raising money, you're letting people participate across the platform, but there's been quite a bit of political commentary on this. You know, who's against it?
Well, I mean, from my perspective, you know, the SEC are sort of chartered with being the policeman in this space, and you know, so their regulatory role is to make sure that there's limitations against fraud and restrictions on, you know, people going, you know, making inappropriate statements when they're raising money. So, so you have Congress, in essence, in the Jobs Act, saying we think that other people should have access to these types of transactions and these deals. And then they charter the SEC with creating the rules to go with it. And the SEC's rule, you know, their goal, their charter is to limit fraud and make sure that that they can control what
So they're
happens.
following the natural charter they've been given, which is to protect the investor. I'm going to get a little more of your personal stories. Dan, you've been here in the Valley for years, longtime attorney, various companies.
23 years.
23 years, wow. And so, as you see the Valley, it's changed quite a bit over those years, I have the impression. What's the best way for you to describe today's condition in terms of, is it gotten overheated? Are too many people trying to be entrepreneurs? Or is this just the economy's expanding? We're in the midst of a second digital industrial revolution, if you will.
Well, so from the crowdfunding standpoint, these are tectonic shifts in the securities laws. So these are changes that were completely unexpected and came about after essentially 30 years of no change. So we're kind of dealing with all this from the lawyer's perspective, from the securities perspective, from the market perspective, from, you know, where are we in Silicon Valley? I personally think we're in a bubble. I mean, it feels that way. The money's flowing pretty well. Valuations are up. You know, I lived through 1999. I was there, right? You know, we've been to that party, and it kind of feels like that to me at this point. So you know, we're all kind of waiting.
There are lots of tells that we're seeing. We just don't know when, but there's plenty of tells. Sid, in your role, you also have a crowdfunding kind of an information site too. Crowdfunder.
Workopedia, we call it.
What's it called?
Workopedia.
Workopedia.
Yeah.
Okay.
But it's called Crowdfund Beat. You know, and the Crowdfund
right.
Beat is a media. It's actually we've been doing in the last 4 years conference right here in Silicon Valley and also in Washington D.C. is in the national press. The site is called crowdfundbeat.com, and you know, it's everything, including all the interview, all the conferences we do is very valuable. But my interest is beside that. I mean, I have also, you know, in real estate crowdfunding, and one of the biggest start in this crowdfunding is real estate, because in real estate is nothing new. Everybody gets together and they bought a building and created an LLC. So in crowdfunding, what happened? You know, you have a sponsor, the building is right there, whether it be a commercial, residential, then you have all the investors, all the due diligence, they check the balances, escrow. So it's been a darling of this crowdfunding. And so a lot of this crowdfunding, you know, has been very successful. And crowdfunding in general is made the playing field level for the women entrepreneurs. So you can see that instead of a lot of people coming to the Valley looking for products, looking, you know, for the VCs, they can go to these platforms and somehow get attention. What we reward and lately go into the equity. It's a very good thing, and it's been happening.
Well, I want to thank both of you for coming in. Really, time went like that. I can't believe it. And if you have any contact information for people in the audience who might want to follow up, I'll start with you, Sid, what your email might be, or your web page, or your website.
Yeah, I'm just in Sydney Armani, but the best thing is you go to the crowdfundbeat.com and all the information, my contact information.
Great.
Yeah, and thanks for having me here.
Great. Dan?
So Dan Hansen, we're at Montgomery and Hansen, LLP. The website is mh-llp.com.
Once again, really enjoyed the time of you guys stopping in, giving us
Thank
some
you,
updates and information about crowdfunding. I look forward to having you back because we did not touch on about being an unaccredited investor, and this crowdfunding issue will continue to evolve. So we'll see if we can't reconnect in a few months.
Sounds
Thank
good.
you.
Thank you.
Thank you. Thank you for joining us for this week's episode of Game Changers Silicon Valley. Each week we'll address an area of innovation that may emerge as a game changer of tomorrow. You can follow us on our website, www.gamechangers.tv, on our Facebook account, or you can subscribe to our YouTube channel. We look forward to your continued interest and participation in upcoming shows.